we've been talking for some time, Dan, about VA loan products, and the great majority of interest is probably going to be in the more conventional loans. So what's happening out there?
Absolutely. It's great that this project that Optima is FHA and VA approved, but it's also Fannie Mae approved. In this market, there are many developments which, unfortunately, they don't have approval by either Fannie Mae, VA, or FHA, and what ends up happening is buyers will come to the development and be interested, fall in love with it, and then not be able to get a mortgage. And what I found is that people will come to Optima and they fall in love with it immediately. The beauty is you can always get a mortgage because of the FHA, VA, and Fannie Mae approval on these projects. So what does that mean? That means that if you're looking for conventional financing, typical standard financing, you're looking to make a 20% down payment, the building is 100% approved by Fannie Mae, and you can get extremely attractive financing specifically today, today being October 1st, 2009.
Let's talk today. What kind of rate would I be paying on a 30-year fix today?
4.875. So historically we're at...
Plus points or?
No, that's no points.
No points.
Yep.
4 7/8, no points.
4 7/8, no points. And on a 15-year fix, you're looking at 4 3/8 or 4.375 on a 15-year fix. So, for example, let's say you're looking to.
That's with 20% down.
That's with 20. Yeah, with 20% down.
20%
right.
down, and what kind of credit score do I need to qualify for that?
You would need, in terms of a credit score, somewhere around a 720 or above. 720 or above credit. Obviously, provide the income to substantiate that. So. But let's talk a little bit about payment and for purchase prices. So if people are interested, Joe, for example, in let's say a $400,000 unit here, what would the payment be with a 30-year fix, 4.875? Well, if you're going to put down 20%, your loan amount would be $320,000, and the payment here, including taxes and homeowners association dues on a $400,000 unit here, would be $2,599. Everything, all in. Everything. So association dues, taxes, principal, interest, everything. Now, if you're a first-time home buyer, though, you will receive, and you close by November 30th, as we know, you will end up getting the $8,000 tax credit. If you were to take that tax credit and apply it to your first year's monthly payments, like on a monthly basis, your net payment would actually be $1,999. Just right around $2,000.
Different way to look at it.
Yeah, so it's an interesting way, and actually in terms of accountants and the finance side, that's how we look at it in terms of helping people understand easing their way into home ownership. If you were alternatively interested maybe in a $250,000 property, Joe, the payment would be $1,686 per month. $1,680, and that's taxes, insurance, your principal and interest with the 4.875 and 20% down. But if you were to factor in that same $8,000 first-time home buyer tax credit, your payment would only be $1,086 a month. So it's funny because a lot of times you talk to people and they're renting somewhere for $1,200 a month, and you think, well, $1,686, I'm only paying $486 more per month, and now I own. And even if you're not a first-time home buyer, you're now able to write off all of your mortgage. You were telling me earlier, Joe, yourself, how with the investment of being able to write off mortgage interest, how valuable that is to somebody. And that $1,686
and taxes also. So
yeah, you can write off the tax. You can write off your property taxes and all your mortgage interest. So at the end of the day, if you look at your net payment, even without the first-time home buyer tax credit being factored in, you're probably somewhere just above $1,200 a month anyway. So why not own?
Because I'm nervous about owning. Isn't that the case with a lot of buyers today?
It is. I think that there is a lot of fear in the media and just in the marketplace in general. But I think that the media doesn't always paint as honest of a picture as what's actually going on. They kind of dramatize everything. Right now, if you're just to pan out and look at everything from a historical perspective, rates are at all-time lows. 62-year lows. I'm talking about a 4.875, no points, 30-year fixed.
That's because nobody wants to borrow money.
Possibly, but you'd be surprised. There's actually quite a lot of activity. And recently purchases have been up, and we're very busy. So there actually is quite a bit of activity with the rates and with the governmental incentives. And so as a result of that, Joe, if you pan out, you say rates are very low, okay? But not just, part of the fear component is that historically, in the past 10 years, people were getting very unsafe mortgages, subprime, adjustable rate, option arms, all kinds of programs which really were designed only for investors, not for the average person. And so the financing that we're talking about, Joe, is 30-year fixed rate, your payment can't change financing. That should dispel a lot of fear right there. And you're able to take advantage of these rates where the people in the past were getting much higher rates to begin with, and then they were adjusting up. You're getting a fixed rate and it's lower to begin with. In addition to that, if you're a first-time home buyer and you're a little bit nervous, the government is giving you $8,000 in cash as soon as you close. Meaning, after closing, you can immediately re-amend your tax returns and get a direct deposit $8,000 into your account. So if you're worried about having additional reserves for that monthly payment, then I think that there's really not as much to worry about as people may originally think.
One of the fears people have, obviously, is the fear of losing their jobs in these kind of times, and
Absolutely.
And also fear of falling prices has been a concern too. What's your take on that?
That's a good point. I'll address both things you just mentioned. Number one is, in terms of losing your job, there's nothing that I can say about that. I think that's definitely a consideration you need to take if you really are concerned about your job situation. I just counseled a woman about 2 weeks ago, and I said she kind of mentioned or hinted at the fact that she didn't feel a whole lot of job security. I told her, I said, now's not the time for you to buy. But if you feel pretty comfortable in your job, if you have a pretty good amount of reserves, if you think you have marketable skills, which even if your company were not to remain, that you could go somewhere else, then I would say, that's about as much as I can say. I can't, no one can predict the future like that. But in regard to the falling prices, that's a very legitimate concern. One of the things I've noticed being on the financing side for Optima is that they protect current owners of the units by not lowering prices for future buyers. In other words, they're strict with their incentive offers in terms of how much they'll lower unit prices for future buyers in order to protect current unit holders. And that's one of the keys that can help protect against falling home prices. One of the things I like about Optima is it's such a unique project. So when I go to get appraisals done, we have to use comparable properties around, and what the appraisers invariably say is there's nothing to compare it to. So even if the market itself may be going slightly down still, we know we're almost close to the end. We believed in 2009 they were going to fall additional roughly 15% in prices. Well, we're at the end and things are starting to kind of balance out, and the development in and of itself is holding strong in terms of it being a market in and of itself.